All right, perfect, guys. Wednesday, January 14th, 2026. I'm your host, Gerardo G Money Pies, and this is the Trade Lounge, part of the G Money Trading Group or the Global Money Trading Group Academy for trading Forex, and so forth. But yeah, it's been a very good week, very busy. I managed to push through two of my indicators, update them, where I want it to be so I can communicate better. Got that out the way, finalizing some other stuff, and so forth, right? But yeah, it's been a good week. We'll review today's trade lounge morning session, and we'll review what could happen next and for the rest of the week, using the analysis that we have here. And go from there. But before we get started, guys, as always, right, these calls are for educational purposes only, and any trade idea or speculation is just that. So please be mindful of that. Got Daniel from Chicago as my co-host. How's it going, Daniel? How you doing, man? If you're unmuting, sir, I can't hear you, but if not, we'll get you when you're ready. He's probably
I'm good. I'm
oh,
ready.
there he goes.
Yeah,
Hanging in there,
that's
man.
good. In fact, I was just looking at your pretty quick chart right now. I just see a pattern I haven't seen in a dog's age, man.
Okay.
One of my favorite patterns. Do you have your channel tool by chance?
Somewhere I can probably find it. You can try to draw it if you wanted to.
Yeah, I will draw it. It's pretty cool. I haven't seen this pattern in a long time. So basically, you got this trend line and this trend line kind of form it's a channel. Then it's got little dashes in the center.
Okay.
Acts like a Fibonacci tool that I love, and I haven't seen this pattern. This is a pattern that Danielle and I really liked.
So just a little channel moving through.
Just a little channel. Yep.
Nice, man. Nice. So you ready for the weekend animal for the Bears? The Bears? The
The
Bears
Bears, you
are the
know what I
bear
mean. The
are the
Bears
Bears
are gonna
back?
win.
Who'd you guys got?
Was that?
Who do you got? Who does the Chicago Bears have?
I forgot who. Is it 49?
I
It's
wouldn't
whoever
know.
I can't even remember. My brother John mentioned earlier. We haven't played them since 1985.
Oh wow. The Rams. Rudy says the Rams.
Rams.
Okay.
That's it.
There you
Yeah.
go. Hey, it's
Thank you.
winnable. It's winnable. It's
Oh,
is
heck
there.
yeah.
But yeah, but the Rams can if they get hot, it's gonna be tough. It's gonna be tough. But yeah,
I
we'll
miss
see.
Walter Payton. I've actually met the man back in the 80s. Nice guy. Got to work for him in the early 90s.
Okay.
Done some digital work for him, but yeah, it's nothing like the 85 Bears.
There you go, man. There you go. Rudy says hopefully the Bears beat the Rams. He's a 49ers fan. So there you go, man.
Yeah.
All right, guys. Well, just before we actually get to it, I'm gonna spend here about 30 seconds just kind of introducing the trading the trading platform that I have where I host the live sessions and everything. School's been a platform that I've been using for about 6 months now. Very, very good. The mixture between Facebook and YouTube allows you to put some courses, allows you to get organized, and I really do like it. Easy to join. It has an app already included. You can follow everything through an app. The apps are through your tablet or your phone, and then at the same time, they have a good browser to come along with. But for the most part, guys, the community is kind of like the Facebook post. I'm still trying to get used to these. I'm more of a messaging person, not a post person. I just feel like when you put post out there, it just stays out forever. And it just feels like it's like a big announcement. But I guess that's just the way the digital space is, right? It's infinite usage. So it is that. So yeah, through here, right? We recently did open up the English services again. I am offering English services for live trading. If you go to the community and watch this video, I have a little video here on what the offers are and how you want to be a part of it. If you want to stay for free, that's perfectly fine. We have space for you. But this January, right? My live trading subscription regular rate is $40 a month. If you do subscribe anytime this month, it'll be $25, and that will give you access to live trading Tuesday, Thursday, and Friday. Tuesday, Thursday, and Friday. And that rate at $25 is lifetime. The catch is if you cancel and you come back, you have to pay whatever rate is going on at that time. So very good deal, guys, for live trading. Just to kind of understand how the trading space work. We trade live together all the time. And obviously, you also have access to the start, the course. This is not available just yet. I'm still wrapping up some stuff. And the free trade lounges every Wednesday, 7:30 a.m. Central and 9:30 p.m. Central Time. Any questions or comments, feel free to message me from there, and we'll do that. So if you are a live trader subscription already, we'll see you guys tomorrow at 8:15 Central Time for some live trading. But yeah, let's recap, guys. What today's market gave, and today, believe it or not, it was a tough one today. But given now that we have many tools that to kind of look at the market, I'm always top-down analysis from weekly to daily, from intraday when it comes to the sessions. But obviously, through the course of time, you teach people, they learn, they become their own masters, and then and that information comes back to me. And one of I guess you could say friend, student, trader, he developed a strategy during the New York that has allowed me to kind of piggyback off of that, and we were able to catch this nice sell to the downside. So we'll review what the sell that we took, and just even though gold is in a bullish market, why the sell was the one to take, and so forth. So let's quickly review that right quick. Let me go ahead and clean the house here on the indicators and also clean. Okay, perfect, guys. So this quick lesson that we'll go through today will strictly be about the sessions indicator. Okay, I'm not going to go over the settings or anything like that of how I use this indicator, but it's very, very important how to, there's three major sessions throughout every 24 hours. Okay, so let's see, delete that. So there's three major sessions every 24 hours, right? Let's put Asians yellow, London. We'll color this like sometimes. All right, perfect, guys. Okay, so there's three major sessions every 24 hours. Okay, there you got your Asian session, your London session, and then your New York. Asia, it is a combination from Sydney and Tokyo, but altogether they call it the Asian session. They have very specific times. It opens and closes at the same time for all, just in different time zones, right? So this session indicator allows you to put blocks on, when that session occurred. And, for the most part, this is really good information for us to review. How many pips did it move during the Asian session? How many pips did it move during London? How many pips did it move to New York and so forth? Okay, so we'll start first here with the New York session. Okay, and the time and price. If you really want to get a good foundation in trading, I would say of two, three things that you should learn. Obviously, number one is the anatomy of a candlestick. The anatomy of a candlestick is very important. Number two is connecting that anatomy of a candlestick to the right-hand side of where the price is at and how they move, right? That's number two. And then number three, right, is time. You got to understand how the timing works, how many pips does it move during this time and so forth, right? So you can really understand that movement. So I'm an intraday trader during New York, right? My trading window, I guess you could say, is I start from 7 in the morning and I want to be in the trade before 9 and be done. I can be done at 9. I can be done right away in 5 minutes. I can be done until the price hits my take profit, but I want to be actively searching for a trade between 7 and 9. Okay, between 7 and 9. So this blue box represents partially that information. So right here, as you see here, down here, this is 7 o'clock in the morning, my time central, 5 a.m. Pacific, 8 a.m. Eastern, and I think like 2 o'clock in the morning, Bernie, for Australia. I'm exaggerating, but it is pretty late for them over there during the New York session. and then it closes. I purposely close it a little bit earlier, but it closes technically at 4 p.m. Central. But here I close it around 3 o'clock, right? 3 o'clock. But here's the thing, right? Inside of the New York session, London does float over. And I close it early on purpose. But technically, guys, the London session opens from 2 in the morning Central Time, and it leaves us in New York at 11. Okay. So this right here that you see is known as the overlap. And that anything you want to comment there, just so we kind of, but I missed there that you may want to add something to.
No. The lens is, I like where you cut it off at because it's pertinent. However, if you notice that little bandwidth of overlap, if you notice how the Asian got a nice lift up, went sideways during London, and then came down and retraced back. The interesting thing about that is the way you have it set up where you push the London back to here truly shows that.
Correct.
So if you're coming in at 7 o'clock in the morning, you're ready to get in somewhere around, let's see, so 7 o'clock position is this one right here.
Yes, the first vertical line is 7
Right,
o'clock
the
in the
first
morning.
one, right there, cool. That's going to start our pretty much our day for, as you said, New York session.
Correct. And this is
I
where,
love it.
oh, I'm sorry, Dan, I thought you were done. Go
An
ahead.
interesting thing too, and I love it, is you can definitely see when they have that spacing like that, you can see not only that pattern, but you can also recognize the higher highs a little more clearly. And you can, it just makes things a little neater if you cut the London session short because of that overlap.
I agree, for sure. But on this scale here, guys, this is one of the things that allow me, one of the things that really tricks traders, right, at the early stage is changing time frames, right? Changing time frames really changes people's kind of perspective. But in reality, when we change time frames, all we're doing is just changing the anatomy of each candlestick, right? It allows us to zoom out and zoom in, but at the same time does not change, nor the price range changes. So for example, right here, if I go to a 5 minute chart, okay, that same window remains 7 a.m. okay to 11 a.m. where the overlap is. Okay, same window, that doesn't change. The only thing that changes is just the anatomy of each candlestick, the open and closes, and so forth. So long story short, right? If we review the overlap, right? Today, the actually today the strongest move on New York was actually from here to here. So it was bullish. Okay, so today the buyers actually won the day. However, during my window of opportunity, we were looking for sales and we were in the correct direction in the window of opportunity that I wanted, right? If we would have gotten in right here, right? We would have gotten in right here, it would have been a great entry. And let's say our take profit was up here. Well, we're gonna go through this roller coaster, right? Price went up, went down, went up, made the M, thinking that it was gonna continue going upwards. We probably go to break even, and then price comes back, takes us out, and then it makes this move. You see? So I am looking for the strongest move during New York, but more specifically, the strongest move between 7 in the morning and while the overlap is there. That is what I'm looking for every single day, regardless of the trend, regardless of we're bullish or bearish, regardless of the S&Ts are more bullish at that time. Are they going to correct themselves and so forth? I'm looking for that strongest move. And today, right, price moved in a range from highest to low, 435 pips, right? And this indicator really does help me kind of understand the math of trading, right? The math of trading. But I think we got the sell somewhere around here, and we were able to capitalize. We kept this short because I think we took profit around 46.20. So let me just kind of be more accurate here. Yeah, so we probably took the sell from 46.35, and I know we took profit somewhere around 20, right? Because the market was more bullish, and I was waiting for a buy, but the momentum was so strong. We got there so strong that it was just okay. Let me just be more patient. Don't chase too many trades, or don't chase the buy just yet. But that's how we got our move to the downside today. And more specifically, right? How we got the move is simply just by bringing back the daily candlestick, guys. I make my decisions based on that. And here goes those two parallel lines, vertical lines, excuse me, that I had drawn. And let me just kind of rewind right at 7 o'clock in the morning. And not to go into too higher time frame, because we'll do that towards the end when I do the higher time frame analysis. I mean, all my see, yeah, all I needed for me to make a decision was this box right there, this blue box that represents the Monday candlestick, the low and the high, and this one represents the Tuesday candlestick, the low and the high. Our job in trading, guys, is very simple, right? Is to speculate where price is going to go. Once you establish that direction, price can trend to it. Price can do a double bottom, a double top. It can do an M. It can grab all the liquidity in the world. I just care that from where I enter, it gets to my destination. That's all I care about. And once I know that destination in pips, that's where your lot size comes in, and you say, okay, well, how much money do I want to make? If I put this lot size, how much would it multiply it, and so forth. And long story short, I'm only looking for 50 to 90 pips. And sometimes I give myself a bonus, 120, 150, and then let a few run just to see where it goes. But this was my control. That Monday candlestick was my anchor to put a fib retracement tool on it. So I always measure. It doesn't matter where you put it, guys. To be honest, I mean, more traditionally, you people put it from the low to the high, but again, though these price levels are all the same, and I put mine right there. Okay, basically, just understanding where that fib is at. That's all you really need to know. Your zero is your start. Or excuse me, your one is your the start, and your zero is the stop of it. And then from here, kind of, okay, here's the levels. Here are the levels that we're trying to go. So today on Wednesday, right? Price was kind of already, the previous day was bearish. Monday, yeah, Tuesday was bearish. We're kind of already kind of took the highs. Price did not look like it wanted to trend. It's like a little weak trend. See a little weak. There's no real structure trend, right? A nice healthy structure was just kind of like a little floaty type of trend. And like, all right, this doesn't have the juice to really takes us up to the extensions, because that's where the price should be going based on Monday's impulse. Okay, so if price does not want to go to here, all right, where's the next area price would like to visit to? Maybe the 23%, right? The 23% of this area. So, okay, that's a good area for us to take price down to, the 23%. Let me put a line there. Perfect. So that's kind of like our first goal. Hey, can we get there? Can we get there? But then when we turn back on the sessions, right, it is a manageable area to get to, right? That 23%. Okay. And again, though, where's price going? We got there. You see that, guys? How it gets there, how much liquidity grabs, how many ETM candles it touches, how many fair value gaps it filled. It's important. But if you really want to take that your next step in trading to really, really see the market, you first have to paint a path to it. And with the Fibonacci retracement tool, I mean, it all for us. I know Dynamo, became a big student of the 1, 2, 3 strategy, Dynamo, and basically is just using the fib.
Yep, that's all it is. Nothing more. And the beautiful thing is you've even marked out certain levels based on the Fibonacci, which is if we're trending, isn't it the first level between the 236 and the 382? And the institutional is way down at the bottom, and well, I forgot what the middle one, intermediary or but the 50 to 61, the 62% there. So you got all your levels marked off. You did it, I think, in your in the Sunday's class.
Yeah.
That's huge. Just knowing who's in control. And that's the key. Who owns the market? And that fib tool will totally tell you.
1 second, guys.
So,
I think you're coming in through. I think I've been coming in through as well, but just my audio has just been off here. 1 second.
not worried, mine could be off too.
No,
I might
you're
have to
good. No,
change
it's me. It's me.
Okay.
Just
But
take a
yeah,
little off.
fib
That's fine.
tools are important.
That's fine. But yeah, the Fibonacci tool is extremely important. It's very consistent. It reads the market and it works very, very well, guys. And that was the plan, right? There was an opportunity to buy out that 23%, but we came down so strong. We got the pips that we needed that we left the live trading chart with the win on the sell, whoever took it. And at the same time, I said that we could potentially buy from right here. Was it I put us at 40? I put it at 40. What I put us at on the buy? I put us at 45.99. Okay, for a live trade group. I put us at 45.99 and literally price pivoted just above it. Just 4,600. But again, though, right? We did make our money there. This would have been the move to the top side and so forth, right? But yeah, so that's how for the most part on our Sunday sessions, we have a Sunday study group for VIP members, and we go through the educational stuff. And last time we did a fib lesson, and we mix it up here and there. But these sessions we also provide little snippets here of some of the content that we teach. But yeah, let's speculate further. Let's speculate where price is going for the remainder of the day. Let's see if there's any news tomorrow. I think there is one more news event. Uh, ForexFactory.com is a good source to go to. Yeah, 7:30 in the morning. Wait, oh no, that was today. Excuse me. 7:30 in the morning as well. We got some more orange folders. Then Friday, no news, but the volume will be there. Okay, volume will be there for us to move. So yeah, let's do a top-down analysis, midweek style, and yeah, let's see how we're looking. So for the most part, I use two time frames for the higher time frame review, the weekly and the 4 hour. Alrighty. So these three candlesticks, right, are in play because this one was a big bearish candle. So these and then price turned on them. So I am actually gonna get the range from these three, okay, from those three candlesticks because again I want to measure it with the fib. So these three candlesticks are important. Weekly control candlesticks 1, 2, 3. This fourth week we came about 61%, pivoted, and then we're at some extension levels from this control scenario where it's previous week right there. Hold on. Yeah, we're you'll see it here in a little bit where it's interesting to see where we're at, right? We reached that extension. Every time price hits that negative 18,272 extension, we get a big pullback, at least back to the zero or the 236 from the scale. So we'll keep that in mind. Okay. Let's go down to the 4 hour chart now. And this range remains, and obviously this fib also remains intact there. But I'll scoot this over here just so it won't get in the way. And the next thing that catches my attention is the previous weekly candlestick. Excuse me, I did forget to mark it up here. Let me just quickly do it. This is the previous weekly candle. This is the current candle, which has 1 day and 18 hours left to go. So that's the previous weekly high. And then this is the previous weekly low. Like so. Text. And here, I'm actually going to go back. Now go to the 4 hour. All right, there it is. Okay, now we've got the 4 hour. Here goes that fib that we're talking about on that bigger scale. I'll scoot it over just a little bit. So this is how I personally mark up my support and resistance levels with the fib from a higher scale. Okay, I don't do traditional support and resistance. It does work. I just don't do it because I rely on the fib too much for that. But here is the previous weekly fib right there. And this week already, right? Notice here that the week started off strong, pushed up, and then actually hit simultaneously today the negative 618 extension. Okay, hit the negative 618. That's an area where it's okay. It's gone high enough, right? So traditionally, right, when you draw a fib, you get an impulse, you get a correction at the 23%, the 38, 50, whatever, and then price turns. So and then it goes higher, and then you have extensions that can stop price from going higher because everything is equilibrium, everything's balanced out. So here, right, basically it's going to be, oh man, sorry, I stop share by accident. Here, simply is going to be is if this level does not hold, we'll see. Yeah, check this out, guys. At the 0 level from that bigger scale, we do have this huge support and resistance right there. Okay. So that's roughly price line 45.50. Okay, 45.50. I think price is trying to balance out 45.50. It may flirt around the previous weekly high around 45.20. But to me, I think the buying zone, okay, the buying zone to me will be here in between for now, okay? Right here, guys. This is the 4-hour chart. So let me see here. This is what I say 45.50 to 45.20. Call it 25. That to me, I'm thinking is the area where price would like to come down towards. Okay. So if the right anatomy and the right structure and the momentum is there on the intraday time frame, we can potentially trade towards it. And then from there, see if we get the right turn to continue going upwards. Okay.
Another
So
way you
that
can handle that
over
too
gentlemen.
would be, yeah. So as you said, we've got this nice N wave pattern. We got this impulse, correction, impulse. Since we have this impulse, just to verify where we'll come back to, you can fib this one impulse here as a confirmation.
Yes, sir. Absolutely. So that's the fib, whatever range you see, you can fib it, right? You can fib a candlestick. I'm fibbing a candlestick, right? I fib those 3 candlesticks. I fib the daily candlestick. You can also fib one independence candlestick on the 1 hour, 15-minute, even 5-minute. But what Dynamo is seeing here is 100% valid. We have impulse, correction, impulse, right?
Mm-hmm.
So how did price get up there? Well, let's just quickly measure from this low to this high. Right? Let's see how it moved there. Pushed up, pushed down, just missed the 50%, and then went up here to the extensions. Okay, perfect. We made a new high, so we also have to readjust the fib from this low to this high. Okay, and look at that. It's trying to break that 23%, and if it doesn't break the 23%, where those levels of 45.50 and 45.25 is right there, Dan, at the 38.50%.
Yep. Mm-hmm.
So that's another way to kind of get your fibs measured and so forth. So once I go to the 2-hour time frame, the days come on board. Okay. And this day is still pretty strong. And again, right, what happened on the weekly scale? Remember, guys, what happened? Imagine if we were on the weekly scale earlier. What happened to those three weekly bullish candlesticks? Do you remember on the fourth candlestick what happened? That one came down and passed 50%. Remember? Maybe 61%. So check this out here. We have one, two, three consecutive bullish candlesticks. Obviously, the fourth one was not able to bring us down, but the fifth one does not want to trend up. It could very well be that we're trying to balance out these three candlesticks. And eyeballing it, right? Where's halfway of it? Eyeballing it is about right there. And now what price is that? 45.20. Okay. So again, I think price would like to balance out towards that direction. And just a matter of how can we catch a move to take us down there. All righty. So okay, yeah, that's just a little bit tricky, man. It's gonna be tricky. Simply because they're all right, let's do this, guys. Perfect. I've been trying to target this 15-minute rally-based rally since Monday. And I just did not want to come to it and decide to trend up. I like this 15-minute rally-based rally right here. And right here. Okay. That the high of that one is 45.55. I think that could be a good target for us to trade towards. 45.55. Put a 56. I don't like taking profit at right there. And the question is, right, how many pips is it between now and there? So approximately that's $32, just over 300 pips. Now our job is to try to sell high. Okay, so try to sell high, as high as possible. From I am not looking left anymore from this arrow. From this arrow, I'm only looking to the right. I'm only focusing on the candlesticks that are inside of this range. And now I'm just simply focusing on for patterns. Okay. Let's see. Visibility. All right. So let's go to a 12-hour chart. All right, how does that red area looks like? Okay, so we don't have a lot of definition here. It's just one big candlestick. We'll close in 6 hours. 8-hour, okay, not bad. On an 8-hour time frame, we're forming a base drop. And this 8-hour candlestick closes in about 3 hours. Let it close, we get a pullback back into that area, and then we can take it down. So I like that on the 8. 4-hour time frame, we're getting 3 consecutive bears. 2-hour, just consecutive sells. 1 hour, one little base drop there. It's a lot of wicks for my liking. That's the reason why I'm kind of not in favor. But here we go.
Here we go. There's a beautiful site right here.
Yep. We're getting some more
drop base drop is 1.
Mm-hmm.
And also, like this back here is BEC.
Okay, let me see here.
So we got two chances for it to go up and then come back down and take us down.
Okay. 45 minutes. So that's an equilibrium zone.
Mm-hmm.
And same one up here, right, Dan?
Yep, that's the one. Yeah. I'm liking both those at the moment.
Perfect. Okay, and now let's see how it looks on 30 minutes. 30 minutes. That's a nice
30 minutes, so beautiful. That's pretty.
I do like this one.
Nicer
I like
than
how
that.
it looks. More balanced and even.
Yep, I like the strength of that even better.
Yeah, 30 minutes. 20, 15.
Oh, even there, the BEC right there. That same zone.
Yep.
That's looking gorgeous.
Okay, let's see how the 5 looks. Yeah, so we have a couple of. I do like this one too, Dan, right here.
Yeah, I like that
4606.
Yeah. Mm-hmm.
A nice
and
one.
What's interesting, you've made a point. Your 2-minute and 5-minute time frames. The last couple of times I've seen some of your posts, those have been where the strength is coming in at, which is interesting. Yeah, I like that.
I'll just check the time then. I just realized it's 10:10. We're having too much fun.
I know, right?
All right, guys. I know it's late for some of us. So yeah, selling target for me, 45.56. Our sell high zones, in my opinion, are up here. 46.05 is the first one. And then if it wants to grab some liquidity from this high or these high, we could potentially go to 46.18-ish, give or take. Okay. So that's kind of the plan of action. And or if it goes a little bit higher, we'll go up there. Regardless, though, right, is how many pips is it? From the lowest point, we're looking at a 500 pip move. Will it get there tomorrow? It may or may not. It may take both days. We'll see. Okay, but I do like this as of right now. I do like this moving to the downside. My momentum indicator.
Also,
Go for it,
I also like, let's see if I can find my little marking tool. I can't find my drawing tool again. Anyways, there's a nice 5 minute drop base drop. It's not really pretty. It's pretty ugly. Just below your 45 5 minute one. There's like that zone right there.
man. Okay,
That's gonna could keep price down as well.
got it. Excellent. Yeah, but
That
my
could be a challenge. I'll look at the 2 minute. It's right there.
yeah. Hold on, Dynamo.
Yeah.
And yeah, basically on the SMT boxes that I like to use, guys. The equilibrium is right there, so it's not bad. Everything is still bearish to the downside,
Yeah.
and the closer price can get to those areas, I do like it. I do like it.
Yeah.
All right, so let's go ahead and wrap this session up. We will go ahead and just focus in from that zone, and I'll share this. Actually, yeah, 5 minutes, fine. This chart with you all. Copy link. And I'll share also the higher time frame one as well, because that one is important. There it goes. The question is, right, where's price going? Right now, I see it going to 46, 45.56. And there it is, guys. Well, thank you guys for the attendance. Keep an eye out if you're part of the school community. Feel free to use all the resources there. Ask questions directly. We're here to help you guys out. If you're a live trader, we'll see you guys tomorrow, 8 o'clock in the morning. Officially start at 8:15, but I started to open up to Zoom at 8 o'clock in the morning for some live trading action, guys. So we'll close out. Daniel, appreciate your help, man. And we'll see you guys on the next one. Thank you.
Anytime. All right. I look forward to seeing you in the morning. I will be on.
All right. See you then.
Okay. Later.